Max Scruffy had a chart, E-I-E-I-O, and on that chart he was a dick, D-I-E-I-O. Well then, boys and girls, it's Saturday morning. Must be coffee with Scruff, which I've actually just forgot, as my glamorous assistant is bringing up, because I need a coffee. Because we all know Scruffy likes a coffee. He also likes to make a bloody mess. And for those of you who have not been here before, it is a trading channel. She is my real wife, contrary to belief. I'd one muppet thinks that I pay her.
I'd buy that for $1.
I do actually pay you, actually, don't I?
What, to be your wife?
Well, I thought you were a bloody extra. I mean, some people, they astound me. But that's the nature of this job. We are humanised as traders, and we can manifest that in the chart. So this coffee with Scruff is going to be about that.
Human.
How your human emotions can manifest in the charts. But there's also some kind of good news and bad news. And it could be, well, depending on which way you look at it, swapped round. So we'll start with the good news.
Good news and bad news.
Well, the good news is the fivers have had a little bit of a shake-up. All right. I like the fivers, and for those of you who sort of follow the prop industry, it's the only one that I consider. A little bit like when it comes to women, I might like Princess Leia. I might lust after Wonder Woman. She's got a couple of outstanding qualities. All right. But I choose the best of both.
Oh.
Because she's got a couple of outstanding qualities as well.
Big tits. Huge tits.
All right. And she loves the... You do like that, actually, don't you? There's your friend.
It's not my friend. You're the one that does.
Well, we're going to do Knobhead of the Week. And this week, everybody's been pretty good, actually. You know, we did have a couple in the live sessions last week. But I'm in such a good mood. All right?
Why is that?
Well, it kind of comes back to a number of things. Well, firstly with the fivers. Well, I'll tell you what the good news and the bad news is. The good news is the fivers have updated some of their terms, and they've opened the gates for our American cousins to come back into the prop industry after sort of, well, a couple of years ago, things went a little bit into meltdown, didn't it? But that's all changes. And they've actually introduced C-Trader into their platform as well. All right, so that's good news. But there's another good thing that I want to point on. And this is where human emotion comes in. But the bad news is, boys and girls, and I'll have to tell you this, right? Well, I'll switch that back on in a minute. All right, the bad news is Winky and I are going away.
Oh, come on!
You're not going to see us for a little while because we're going for some sun, sand and sex.
Oh, that's disgusting.
All right, why? Well, because she likes the willy. All right? No. We're going to take a little bit of a break. We'll sort of go tomorrow. I wasn't going to do anything today, but I've got a bit of time, and here we are. I do it every Saturday, so why change the habit of a lifetime? Now, that's good news for me. It's bad news for you. But for some muppets out there who think that she's a paid sort of actress, that might be good news, not seeing me for a while. Boo-hoo, boo-hoo. Do you know what? I might make a video every day when I'm on holiday just to piss them off. Anyway, you laughing at?
Yeah.
Have I took my trousers off again?
No.
Well, you normally laugh when I do. I need a mirror to see it.
I'm sure everybody wants to know that.
Huh?
I'm sure everybody wants to know that.
Well, why not? You laughing at? What's the matter? Have you not had your wages this week?
Eh?
Hey?
I'm tidying your mess up.
Oh, well, that's a lifetime job, innit? Right, sorry. Right. Have we got rid of all of the lurkers yet? I hope so. Okay, we'll start properly. Good morning, boys and girls. A lot of the time at the beginning of the videos, and certainly on my trading videos, do little monologues and everything. And it's genuine to shake out the idiots. You know, and I can see it from the stats. Within about 45 seconds, about half of the people, 60%, just switch off and go elsewhere. And I know I'm told, get your hook, get them to stay. I don't want those people to stay. Because they're looking for shortcuts and they're looking for an easy ride. They will never make it in this job. And because they'll never make it, there's no point spending any time with them. So that's why I do it, okay? Now, I am a realist. I know I'm a tiny fish in a massive pond, and this channel will never grow. But it also won't change. It will be what it is. Now, you'll either like it or you don't. Now, everything that I do is live, and everything I do is unscripted. Get an idea in my head, and off we go. And today, that idea is about the human condition. Now, let's flick back to the fivers a second. As a training wheels operation, you cannot go wrong with the fivers. All right. And down in the description, if you want to try it, there is a link and there's a little discount for you. Now, when I'm with the squad in the group and one thing and another, this is the only prop fund that I'll say that I use, and it's the only one I talk about. I know there's plenty out there and there will be merits for them. But when it comes to the prop industry, the human greed element comes out massively, and you've got to curb that. Now, one of the good things that they've done, and the reason why I've put this particular screenshot up is, yes, they've now introduced C-Trader. Okay, I personally like MT5, but now you've got the choice, which is wonderful. And because you've got a choice away from MT5, it's been able to open up the US market again, because they can just log on to C-Trader. And that's a wonderful thing, because it means everybody has a shared connection on a similar platform. So if you're talking to each other on different sides of the planet, at least now you're on the same page. But there's one part that I really like here. If you go into the boot camp, they have removed the daily pause section for your evaluations. I'm not a big fan of the daily pause. I understand why it's there. But sometimes the human element pushes the boat out that little bit too far, and that'll clip you. So you've got to take that into account. So when I talk about prop as using the drawdown as your account, you need to take into account that daily pause as well. So if the daily pause is 3%, but you've got, say, 5-6% on the account as a drawdown, you can't size to 6% anymore. You're going to have to size to 3%. And this is where the human emotion takes over, because a lot of people won't. They'll try and max it out, and then they'll complain that they lost. That's the human greed emotion. Now, how can you curb this? Well, I started off singing about Oh Scruffy's Chat. Well, as kids, we used to sing that all the time. Oh, MacDonald had a farm, E-I-E-I-O. Well, is trading not a farm? You've watched me grow a substantial amount of money this year by what's called farming accounts. And I did it through the fivers, predominantly, a live account, built it up, bought a challenge, built that challenge up, got some payouts out of it. Some of them went a bit tits up because I am human, didn't make mistakes on them. But got the money back, got paid, put it into there, built it up, bought another one, did the same thing. And that's what trading is all about. It's about harvesting and reaping the rewards of your money. You know, this myth about having this huge trading account can be actually detrimental. There's only one measuring stick. One. I couldn't give a fuck how far you are up on the prop ladder. The question is, did you get paid from it? No, I get paid all the time. Constantly take the money out. Why? Because that's when it becomes real. Now, how can you curb this? Now, let's concentrate on the O. Well, first of all, a lot of people overtrade. And you might think, no, I don't. I never overtrade. And I have this conversation all the time. Like, how many trades do you really take? Oh, I only ever take 1 or 2. Really? Well, let's have a little look, shall we? Oh, your 1 or 2 happens to be about 20. Massively overtrading. So there's sort of like a self sort of denial in that situation. But if you honestly set out to do 1 or 2 trades a day, you can automatically take overtrading out of the equation. Because what you got to remember is the charts will give you maybe 1 or 2 opportunities a day. 1 in the morning, 1 in the afternoon. So that's what you should be aiming at. The next part is you have like sort of an over tendency. And what the over tendency is, it's to look at too many products at once. So you should only ever really be looking at about 3. You know, I had this question earlier on with Richard. So that you say it in the Ask Scruff. About 3 products. Well, you can have like say a Forex pair, a commodity, and an indices. So you've got 3 assets. All right. Stick with 3. Look for something that's a world driver. Now that'll run 24 hours. So it could be oil or gold. They'll both run 24 hours. So you could look at that anytime. Look at an indices, but look at an indices that'll be vibrant in the morning for where you are. So if you're in Europe, it's the DAX, the FTSE. If you're in the US, when you sort of your morning, it's the US 100, the NASDAQ. That sort of thing. If you're on the other side of the planet, maybe it's the Nikkei or the Aussie 200. Because you'll have that quick burst on the morning, get your trade, put it to bed. And then when it comes to the pairs, well, look at your domestic currency. So for me, it's the pound and the euro. I live in the UK, so it's predominantly the pound. Why look at it in that principle? Because it's all around you all the time. You know, when it comes to reading sort of economic news and understanding sort of all the little quirks that you sort of think in the economic calendar, trust me, you don't. You know jack shit. You know, unless you were in the room, you've got no idea what they were talking about. So you can talk as much as you like about economics. You know fuck all. Nothing. But what do you do know? You know when it's coming, and you know whether it's high impact or not. So you can now control that narrative. You don't know which way the market's going to go on the release. You've got no idea. I've seen good figures tank the market. I've seen bad figures rally the market. So what you need to do is know when not to trade. And that's where the economic calendar comes in. So there's these little elements to take into account as well. But you would have a general feel of the market just by your day-to-day living. You know, that's why I say look at your domestic currency. So that's one way of doing it. So if you're overtrading, looking at way too many products, that's a real issue to start with. But there's one area that is very rarely touched on. And I don't really watch any trading channels.
Are you sure?
In fact, well, I just don't watch them. Because to me, it's a job. So when you go home and you've been a plumber all day, do you watch a program about plumbing? Probably not. You know, well, I'm the same. So I want to watch sort of Wonder Woman.
Bring on the dancing girls. Get rid of this idiot.
Fuck you. Off.
Yeah, I get wrong for that as well, actually. But then again, maybe I should watch the proper one and not the one that I saw. Oh, sorry, you've got to have age verification now, haven't you? Get round that, just put Opera on the VPN, you saw it. Oh, sorry, we're on a different track again. I'll have me coffee. Because we all know Scruffy likes a coffee.
You are the most immature man I've ever met.
You're Belle, not.
Yes, you are.
Not.
Oh, God, give me strength.
He is excited because going on holiday tomorrow. Look forward to it. See the squad as well, or some of the squad in Manchester. So I'll be in the Marriott tomorrow at the airport and have a few drinkies. So if anybody's kicking about and you see a drunken idiot rolling around in the corner, probably Winky. Nah, it'll be me. Anyway, let's get back onto this thing that nobody ever discusses. It's actually the target and the stop. Now that's an over expectation, and it's the biggest one to worry about. You see, when it's time to go to market, you could even flick a coin, go, I'm going to sell it, I'm going to buy it. That's as good a strategy as anything. Why? Because we're going to deal with the future. We don't know where the market is going. We can surmise, take an educated choice, all of that sort of thing, but you actually don't know. All right? So you have to protect yourself in certain ways. I do it through a DCA method, where it'll reduce my exposure as it goes against me, but it increases the upside as it goes for me. It works for me. I'm not going to change it, and I have arguments about it all the time. Doesn't matter. It ain't changing. All right. Now, if you look at institutional traders, pension funds, anything like that, they all use that method. All of them. None of them go 100% to market and go, I'm going to do 3 to 1. Hey, I'm going to do 3 to 1. Not one institutional trader does that. Not one. They will stage into the process. And it's all based on this is how much it's going to cost the trade versus how much we surmise we might get out of it at the minimum side, and what we would like is an optimum side and somewhere in the middle of that bandwidth. They work on that. So it's not always open and shut. Now, if you have an over expectation, and for argument's sake, you're looking at a chart. Now, if you're looking on a 5-minute chart, it's going to tell you jack all. Not really. It's just noise. Your points of interest will come from higher in the charts. Your hourlies, your 4 hours, your dailies, weeklies and monthlies. They're where your points of interest come from. And those swing highs and swing lows become quite significant. Now, your first stage target should be to one of those swing highs. Now, that's not an over expectation. That's just reality. It's the way it works. But if you say, well, I'm going to ignore the first swing high and I'm going to ignore the second one and I'm going to go for the one that's at the moon. Well, yes, it'll do once in a blue moon. But all the times it fails, it will do you pretty bad damage. Now, if you're day trading, just look at your hourlies, look at the last swing high or last swing low, depending on your direction, and that's your target. Now, when it comes to the stop, it's exactly the same, but in reverse. Okay? Now, you've then got the expectation of, is it worth it? So you can now look at it in such a way and sort of think, well, if it hits the stop, that's going to hurt a lot more than it's going to hit the target. Now, DCA for me kind of softens that out. So it means I can have a wider stop, but I know how much it costs. And I'll agree to that cost. And then I'll look at sort of where I'm normally getting in, work out to where the target is, and it should, in theory, always be around 1-on-1. And then as long as I get it right, more than I get it wrong, at the end of the week, I get paid. Now, that's kind of the way I look at it. But too often I see somebody say, well, I only use a 10 pip stop. Fine. If you're on euro pound, euro dollar, kind of go with it. You try that on the DAX. Like I had a chat with a guy a few weeks ago. Well, it'd be a couple of months ago now. It's suicide. It'll take it out every single time. And the conversation went along the lines of this. Well, I'm 3-to-1 rigid. Okay, well, what does that mean? I have a 10 pip stop and I'm looking to get 30 on every trade. Every trade? Oh, okay. How's that working for you? I win some, I lose some. All right. So why are we talking? Well, I don't seem to be getting anywhere. Oh, okay. Let me have a look. Guy was stopped out 6 times. Now, bear in mind, already said this is like an A1 day. Good day. Stopped out 6 times. And then on the next trade, hit his 3-to-1. And genuinely thought it was a good day. Thought it's a great day. I've hit the narrative. Everything's fine. I had to burst the bubble and say, you're not going to make any money at all doing this. Couldn't understand. Said it cost you 60 pips, but you only got 30 back. So the narrative of, because you've had a 3-to-1, it wipes out. It doesn't. You would need to do that a number of times in order just to claw back that 60 pips. That's why you're spinning wheels. Too rigid. Too much of an over expectation. Because the stop was too tight. And these are the things that you need to think about. And it's why I talk about the human condition. Because our heads are hardwired into what you hear and see. Why don't you just flip it and just take every trade on its merit? Swing low is 45 pips away. Fine. You need to give it a little bit of grace for the spreads, etc. So you need a 50 pip stop in that scenario. Well, if you're a pounder point, that's going to cost you 50 quid at the point of entry. But it's only 20 pips to the next swing high. So it's 50 to 20. Some people will take that trade. And they'll take it because they're going back to overtrading. Because they are talking themselves into it. Now, the over expectation of target is out of whack. How do you correct that? Well, instead of going in full tilt, stage it backwards. And you'll find that it will reduce and become back to 1-to-1. So again, what you've done now is you've taken a bad situation and made it into a reasonable situation. Common sense. Now, I know when I do these videos, a lot of people don't get it. And they don't get it because they're looking for the X marks the spot. Now, the X marks the spot doesn't exist, guys. Common sense does. Markets are living, breathing things. And because they're living, breathing things, they change all the time. You can know people your entire life. And in a heartbeat, they'll turn on you. Why? Because it's the future and circumstances change. Do you not think the charts are the same? Certain traits you'll see over and over, but when you're dealing with the future, you've got no idea. Something for you to think about. Cherish your thoughts on this. My personal belief is this. I trade small in relation to the account. So if I've got it wrong and it hurts me, it doesn't kill me. Because I'd rather have a slap in the face than a kick in the bollocks. All right? So that's the first principle that I work to. The next principle is I know I can't outwit the markets. I know I can't do it. So therefore, I will trade less so that I'm not exposed to the market that much. People complain all the time about how I win a lot. I win a lot because I don't trade a lot. I trade once or twice a day. I follow the same process, top to bottom, to get a picture of what the market is doing today. And even if I've done a top to bottom yesterday, and I looked at the monthly yesterday, knowing the monthly isn't going to change from yesterday to today, I'll still do the same process. Why? Because certain little nuances will have changed and I might be able to recognize it. So I do the same process over and over again. That gives me repetition, it gives me routine, and it gives me the one thing that I really need. Confidence. So when I say I'm going to buy this market, I am fully committed to it. It's not wishy-washy. I am committed to buying into the market. That helps me. Then when it comes to time to go to market, I'm patient. I'm very patient. If I look at it and it doesn't look like it's going to give me roughly what I'm after, I'll leave it alone. And the guys in the squad, we do it all the time. They ask me to do. I don't pick the charts a lot of the time when you see me trading during the week. I do my trades, which I do anyway, bread and butter. I do trade the DAX nearly every day. I trade pound JPY every day, US JPY. They're kind of the two currencies I look at. And I'll keep a half an eye on gold. So that's kind of my go-tos. But a lot of the time the guys will say, oh, look at this. And I'll do it for them. But then I do the exact same thing. All right. So I don't pick the charts. It's never cherry picked. Now, when it comes from patience and it's actually time to go to market, I never press market order either. I don't just go, because then I've got nowhere to go. I'll put a pending order. It'll be above or below the last 15 minutes. And the way that I do it is through a 5 candle countback. It's very simple. I look at where the candle is now. It'll tell me whether it's buying or selling on the motion. I look at the last candle, 5 candles back, to see where the price has come from. See if this one and that one are in alignment. So if I want to go buy, that one's green, this one's green, fine. And then the 3 in the middle. Oh, bloody hell. Sneezy's there. And 3 in the middle, had a sneeze and blow your house down. No, the 3 in the middle is a rolling 15-minute chart. And I'm looking to see where the high, low, or the compression was in amongst them, just to have an optimum area to enter. And I'll place a pending order. And then from that point, if the market falls away from me, I can then follow the candles to a better price. So everything is methodical and worked out, but it's based on a single principle. And that principle is less is more. The less I'm in the market, the more I'm going to make. Something for you to think about. Anyway, I'm going to go on my holidays now. I'll see you in, I don't know. I mightn't even bother coming back, to be honest. Quite fancy an extended break. But I also have a squad to look after. I don't own the squad, I just moderate it. But I've connected with some wonderful guys in there, and I genuinely want to see them succeed. It makes me really proud when I see them starting to move from being mediocre into really good. And it genuinely makes me want to do it more. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.